Hey everybody, Smart Silver Stacker here. Hope you're doing well today. Welcome to another live stream. We have got a lot to talk about today. We've got some significant pain developing in US markets. Just take a look here. We've got just about every major US stock market index in the red today. You've got crude oil managing to eke out a small fractional gain. Of course, that'll probably just make the inflation situation we're experiencing worse. Also, you got the precious metals selling off. And finally, what's causing all of this? Well, a lot of it has to do with the debt sell off that we've witnessed following the Fed's hawkish pause FOMC press conference. Take a look at this chart of the 10-year Treasury yield. This is the 6-month chart. And you can see just how much the yield on US Treasuries has been spiking up, and it's been accelerating since last week. This is putting a tremendous amount of pressure on markets, which again are significantly in the red again today. The sell-off continuing, and this is going to cripple the economy. This is a huge problem. The banking crisis that we experienced back in March, it's not over. And if rates continue to spike up this way, we're going to see part two of that crisis. Remember that a big part of why Silicon Valley Bank failed back in March was that it's sitting on a large pile of low yielding US bonds. And as the rates on US Treasuries go up, those bonds continue to devalue. And so banks are sitting on these unrealized losses on their bond portfolios. And every time the rate on the 10-year yield ticks up, we get one step closer to economic meltdown in the banking sector. It's not good. Where do you want to be as all of this plays out? Well, I do think it's a good idea to have some cash, of course, but really, I think hard assets are the place to be. It's not financial advice, of course. I'm just kind of sharing with you what I'm doing, but I just picked up these 3 rolls of US 90% junk silver from SD Bullion, who is today's sponsor, by the way. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. And if you're looking to get into some hard assets, this is not financial advice or anything, but they do have this sale going on at SD Bullion right now where they've got a 1-ounce gold bar for $29.99 over spot. It's one of these assayed videos, or I'm sorry, one of these assayed bars. It's in the plastic assay case. And I was reading the chat there. Sometimes I'll just start transposing words if I do that as I'm trying to speak. But $29.99 over spot, any quantity. So if you've been looking to get some gold, that's the lowest price I've seen an ounce of gold for in some time. And I think that's probably a good opportunity to get out of cash. I do think it's good to have some cash, but look, hard assets are going to be where it is at when this banking crisis plays out. And the reason is not so much because of the banking collapse or banking crisis itself, but because of the Federal Reserve's response to it. I mean, what do you think they're going to do when the banks start to fail? We already saw in March they began expanding their balance sheet again with the bank term funding program. And I think that was just a preview of what is to come. And very likely when part two of this banking crisis unfolds, this stuff is going to be very difficult to get your hands on. I mean, we already saw in March when the banking crisis was kicking off, gold and silver, the lead times on shipping absolutely exploded, and the premiums shot up as well. The premiums on junk silver have come way down since that time period, and that's why this is one of the things I'm looking at stacking right now. And sorry, the lighting is a little weird in today's video. This is just kind of an impromptu one. I'm not in my usual spot, so bear with me on that. Also, I got one of these Silver Eagles from SD Bullion. They had these available for spot, so I did pick one of those up. And if you saw that offer, I hope you got the opportunity to do that too, because getting a Silver Eagle at spot in the environment of high premiums that we're living through, always a good opportunity. Now, I wanted to talk to you about this warning that we received from Jamie Dimon just recently, just today, where he's warning of the risk of 7% interest rates. Are you prepared, he asks. And basically he's telling us that doesn't think the U.S. economy is ready for 7% interest rates. And I mean, honestly, when you look at what's going on in the markets today, we've got rates set at 5.25%, and Look at that. I mean, we're in the red, right? So the economy is not prepared for 5.25% interest rates. They're absolutely not prepared for 7%. But Jamie Dimon thinks that the rates could get that high, and he's warning that we may be headed for stagflation, a period of sustained higher inflationary pressures, along with economic destruction and an economic downturn brought on by higher rates. And, if the inflation does continue to tick up, it's on the way up. We've had a move up in the CPI for the past 3 months. If we see that trend continue, then it's very likely that the Fed is going to hike higher for longer. And that is going to be a huge problem for this massively over leveraged economy. I mean, first of all, you got the US interest payments on the national debt. Those are now approaching $1 trillion, and they are going to go higher the longer that interest rates remain elevated, as more and more of the enormous $33 trillion US national debt is rolled over into higher interest rate debt. Then that interest payment is going to continue to skyrocket. One of the things Jamie Dimon says here, which I think is actually a very astute warning, he says, I think there are some long term trends which have gone from disinflationary to inflationary. The benefit of all this trade going to China is gone. The green economy, we estimate, will need $4 trillion a year. The IRA Act, the CHIPS Act, the remilitarization of the world, fiscal spending. What part of that is disinflationary? And that's a very good question, because all of those things are absolutely very inflationary. I mean, the fact that we're in this war, de facto war with Russia via Ukraine, and more money is getting spent over there, that is very inflationary. War is one of the most inflationary endeavors you can take on. We've got China, the trade wars with them. They're dumping US debt now. They're not buying it anymore, so we can't export more inflation to China. That's a huge problem. That's going to drive rates even higher. And then these boondoggles like the green economy, I did a video on that just a couple days ago about how that's backfiring and that's driving energy costs in the West sky high. Meanwhile, our competitors like China and the BRICS nations, they are locking down cheap fossil fuels. And overall, the Fed is misguided in thinking that it's their interest rates that are the problem, that the interest rates just aren't high enough. No, the problem is that there's this massive deficit spending in Washington, and all of that new debt that is being created eventually is likely going to be monetized by the Federal Reserve one way or the other. I mean, they can only continue hiking rates for so long before something breaks in this massively over-leveraged economy where the banking sector is vulnerable. The US federal budget is vulnerable due to the massive amounts of debt there. Ultimately, these debts, they can only be paid off one way, and that is by devaluing the currency and paying off the debt with worthless dollars that don't have any more purchasing power. And I think that that is where we are headed. I had a very interesting conversation earlier today with Lynette Zhang. She gave me her take on this crisis that is playing out. I'll have that up for everybody in the next day or two, so keep an eye out for that one. That's going to be a very interesting interview. I think all of you will enjoy. And who knows? I mean, over the next couple of days, we're going to have to keep an eye on these markets. They're deeply in the red today. Markets are taking a beating. The debt sell-off is continuing. The yield on the 10-year continuing to move up today. If this goes much higher, I believe that the Fed may have to get in here and intervene. I mean, they may need to come in and buy up some of this debt to keep rates from skyrocketing, from getting into a death loop of sorts. Now, let me know in the chat if you'd like to see the contents of these rolls of half dollars. I didn't do like a traditional unboxing, but I thought it might be kind of fun if we could open those rolls up and see what kind of half dollars I got. I was pretty excited because I saw there is a walking Liberty on one end of this and on the other end as well. I think some of them had Benjamins. Yeah, let's see it. Okay, cool. So let's go ahead and open these up. Again, just pick these up from SD Bullion. I think I paid about $20 per $1 face of these half dollars. And to me, I mean, if you remember how high premiums had gotten on junk silver back in March, the fact that they've dropped down so much, I think that this stuff really is one of the best hard assets to be getting into. Let's see what we got here. We got some Benjamins, some nice walking Liberties. What's the year on that? 1942. I love walking liberties. Anybody else like walking liberties? But these, I think, yeah, would be cheaper today. PK, that's a good point. Yeah, today I think is a good day to be buying. I like to stack when markets are in the red. That guy said, yeah, I said a 20x. So for $1 face, I think I paid $20. And one thing, if you recall, during the spike up in premiums that we saw back in March, was that the premiums actually got higher on half dollars than they did on the other junk silver. And that was also if you went to sell back. I remember SD Bullion was paying an extra premium for half dollars. So I do think that this is one of the best forms of junk silver to have. There's another Walking Liberty. I always like those. This is a good mix, though. We've got some Franklin, some Kennedy stuff. Yeah, not bad. Not bad. Let's see what we got in these other rolls. And, this stuff, they stopped making this back in 1964. That was the last year they made 90% US silver coins. And as you can see, a lot of these are significantly older than that. Any of the Walking Liberties date back to the 40s and earlier. And I just think that this stuff is one day going to, even compared to the price of silver as a commodity, I think that junk silver is really going to be one of the forms of bullion that performs better than just about anything else, if you ask me. That's why I love it so much. And also, should things really come down to it and we need like a barter currency or something to substitute for a failing US dollar, it's hard to imagine a better currency than this. Remember, this stuff was the circulating currency here in the United States for a very long time, for far longer than we've been on this purely fiat standard. So, we may be headed back to a end, which I believe, the more and more I look at what's going on in the banking sector, interest rates, and with global debt and with deficit spending, it really makes me believe that we are approaching some kind of a terminus, a final blow off event here. And, it can feel that way sometimes. It's certainly not the first time I have been under that impression. So who knows? But, if you read the Fourth Turning, if you study generational theory at all, they forecast, Strauss and Howe, that we're headed for a major shift that will culminate in 2026. So we're not far off from that date. And, just when you look at everything that's going on, we're on the verge of World War III. We got skyrocketing rates. We got inflation that's being persistent. That guy says, look, kids, that's what real money looks like. Yeah, that's true. This is what real money looks like. This is the real deal. This is the stuff that has been money for thousands of years. I believe it will continue to be money well beyond the lifespan of the current fiat US dollar. And, it's nothing new for fiat currencies to fail and to go away. And I don't think this time is going to be any different. 1943, that's a nice one. Let's see what else we got here. We got one more roll. You guys want me to open it up? You want to, whoops, dropping that one. You guys want to keep looking at these, see what's in this last roll? I'm very happy that I got some Walking Liberties. I mean, when you order junk silver and it's just like a random assortment, you kind of anticipate that you're just going to get a bunch of Kennedys, 1964. So to get a nice mix like this, very happy with that. So thanks SD Bullion for sending out some cool real money here. Let's see what else we got. We got some bunch of Franklins in this one, it looks like. I like Franklins. Ben Franklin's a cool guy, one of our founding fathers. Certainly had a good head on his shoulders. Kind of a good sense of humor too if you read any of the stuff he wrote, but he's a very interesting guy. Let's see, what do we got? 1945, some more Walking Liberties. Yeah, someone in the chat just pointed out that more banks could very well fail with rising rates. And yeah, I agree. If you remember back in March, Fortune reported that U.S. banks were sitting on $1.7 trillion in unrealized losses. That's the losses on these bonds, which are devaluing as debt sells off and yields spike. And I can only imagine that those losses have accelerated since that time because we've seen a very large move up in rates since that time. I mean, the U.S. 10-year yield back in April, it bottomed at something like 3.3%, 3.2%, something like that. Now we're up almost to 4.5%. I mean, that is a huge move. We're actually over 4.5. Yeah, if you look at the 10-year yield, now we're up to 4.54%. That is a huge move in what is supposed to be the world's largest and most liquid debt market. And we talked before about how liquidity has declined in the U.S. debt market as the size of it has increased. Oh, here we go. Here's a nice cull walking Liberty there. That's pretty beat up and it's a little bent. Everything else looked pretty nice in this roll, but I just wanted to show you that one. But you know what? I would still rather have this than some fake fiat dollars personally, because even if this is maybe not for a coin collector, this is still real money. There's not, the value of silver is in its utility and the constant demand for it and in its scarcity. So, yeah, this is the stuff that you want to have your hands on, I think, as we enter into this crisis. Oh, this is a cool one. What's that date? 1920? Wow. That's an old one. Very worn, but still more than 100 years old. It's pretty amazing when you think of this stuff. And junk silver is such a cool piece of history. You look at the circulation on this. This thing actually circulated as money at one point. I mean, how many hands has this has this been exchanged through? And it harkens back to a time when we had real money in this country. And it's just so cool, I think, to get your hands on like a pile of treasure like this. And silver is recognizable as money to humans. That's why, for someone who's never held a piece of silver in their hand, I highly advise you to go down to your local coin shop or to order a couple silver coins and hold them, because there's a special feel to them. And they do what they can today with the currency. They coat it in nickel. They make it still look like silver. They try to pull the wool over your eyes and convince everybody that fiat money that's not backed by anything is the same as real money, but it's not. And we're about to find that out. It's going to be a tough lesson for a lot of people. But this system that we are in, with all of this massive debt and deficits and skyrocketing inflation and central banks planning the economy, we're approaching, if not the end of the system, some major shifts in how it works. And when you look at the fiat US dollar, it's been around since the 1940s. Post World War II, we had the Bretton Woods system, where basically the US had all the gold, so the rest of the world took dollars in reserve and we backed up the dollar with gold. We abused that privilege. We spent tons of money on domestic programs, the Vietnam War, the Great Society, the guns and butter economy, forced Nixon to take us off the gold standard. And now, 50 years later, the price of an ounce of gold has gone from $35 to a real ounce of gold right now is about $1,941. As you can see here, probably the best price on an ounce of gold right now, about $1,941. So that just shows you how far we've come down this inflationary path of the dollar losing value and losing purchasing power. And when you look at what's going on, we got this crash going on, we got yield spiking, we got Jamie Dimon warning that rates could have to go as high as 7%. And I think that even if they do that, even if the Fed hikes to 7%, it's not going to get inflation under control. The only thing it's going to do is destroy the economy. But inflation's not going to be brought under control until the spending in Washington is brought under control. And I just don't think there's any chance of that happening. So that's why, while I do think it's good to have some cash in case we get some kind of a deflationary pan sell-off event, some kind of fear-based event brought on by spiking yields on treasuries, I think it's even more important to be in hard assets, because you never know when the Fed may return to their policies of debt monetization and easing. And when they do, the dollar could be toast. There's a number of black swan events, or gray rhinoceros events, you might call them, lurking out there along the peripheries of the economy. And it probably only take one or two to really have a massive impact on the economy and force the Fed's hand into the debt monetization role, the buyer and lender of last resort. And that's exactly what will happen if we see this debt sell-off continue. And I don't know about you, put it in the chat if you feel like we are on the verge of some major changes in the global economy, because it feels that way to me. It feels like we are right around the corner from some kind of a major event. What that'll be, hard to say. I mean, there's a lot of candidates, debt crisis, World War III breaking out, a dirty bomb or a nuke going off somewhere in Ukraine, God forbid. But I mean, that seems like that conflict is escalating. Taiwan getting invaded by China, drawing us into a broader conflict. If that happens, I mean, the inflation that we've had so far and the supply chain disruptions that we've had so far will look like child's play compared to what's going to happen if a war with China breaks out. And certainly, Sanctions are acts of war, and we're already involved in economic warfare with China. So I think it's only a matter of time until that heats up. But it's hard to say what event will bring this all crashing down first. But when it does, I think we know what the Fed's going to do. They gave us a preview of that in March. They started the bank term funding program, started expanding their balance sheet, and I think that's exactly what they're going to do the next time something rears its head in this economy. But leave me a comment down below if you have some thoughts on what that might be, what the next big event is going to be, and let me know if you also believe that we are on the verge of major changes. But that's it for today, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker out.